Most traders overcomplicate things. 10 indicators, 5 strategies, and still no profits. I've taken the exact opposite approach. The strategy that I'm about to share is the one that's gotten me over $500,000 in prop firm funding and over $122,000 in prop firm payouts in just 6 months. And it's simpler than you think. In this video, I'm going to break down the strategy that turned trading from inconsistent side hustle to full-time income. This isn't theory, it's the exact process I still use today. By the end of this video, you'll know the step-by-step strategy I rely on, why it works, and how you can start using it, even if you're a beginner, intermediate, or advanced already at trading. Look, the reason why most people don't get results is because they just do way too much in terms of trading. They're not keeping it simple to where it's very repeatable. Now, it's not about finding different setups every single time with 10 different strategies. It's about finding the same exact setup every single time. That's what's going to turn you profitable. Now, the problem is people rely too much on indicators, which are just lagging, right? They don't tell you what's going to happen. They show you what's already happened in the market. So you can't really rely on them. And then they switch from strategy to strategy, right? So you might test out a strategy for a little bit of time. It works, cool. And then the moment that it doesn't work, or it loses maybe 2 or 3 trades in a row, then you switch on to something different and you want to find the next holy grail. But let me tell you this, it does not exist. What happens though, what exists is you actually having one strategy and mastering it and knowing, having multiple data points. So let's say over 1,000 backtested trades, and you know over 1,000 trades you have, let's say, a 70 or 80% win rate. That's how it works. That's how you develop an edge. Unfortunately, most people, they just want to bounce from one strategy to one strategy, from one indicator to another indicator, and they're looking for this get rich quick thing. But let me tell you, it does not exist. What you have to do is you actually have to work hard and do the things that you don't want to, which is sitting at your desk and actually backtesting and doing the work that's not pretty for you to get those results during your trading hours. Okay, so now I'm going to break down my $1 million trading strategy. And it consists of 2 steps. Very simple. I break it down for you to make it as easy as possible to digest and understand. First thing first, you need to understand is if you're analyzing on the 4-hour time frame, then your entry should be on the 15-minute time frame. If you're analyzing on the 1-hour time frame, then your entry should be on the 5-minute time frame. And if you're analyzing on the 15-minute time frame, then your entry should be on the 1-minute time frame. Right, so you do your overall analysis on this 4-hour, 1-hour, 15-minute, and then your entry is just kind of like a smaller micro analysis of the bigger time frame. So on the 4-hour, 15-minute, 1-hour, 5-minute, and 15-minute, 1-minute entry. So for me personally, I like to use the 15-minute analysis and then enter on the 1-minute time frame. And I'll break it down for you and I'll show you how to do it. Let's go back to the steps. Right, so first step is finding the direction of the market on higher time frames. Now, what does that mean? There's different criteria, there's steps that we need to follow. So are we bearish or are we bullish, right? So are we trending up or are we trending down? Do we have any areas of interest? That could be fair value gaps, inverse fair value gaps, premium or discount areas. And then at the same time, you want to mark out your liquidity, your sessions highs and lows, so you understand where price is headed to. Right? So that's important. We need to understand where is the market going, because if we don't know where the market is going, then how are we ever supposed to know what to do or in what situation to trade, right? So, and some days, some days you're not going to know where the market is going, and the best traders will simply close their laptop and move on to tomorrow, right? Because me personally, I don't know where market is going every single day, right? But the days that I do know where the market is going, I take full advantage of it and I make money on those days, right? So there's no ego in trading. Just accept that some days you're not going to know where market is going. Some days you're going to know if it's bullish, some days it's going to be bearish, other days it's going to be consolidating. So it's going to be moving like this, right? Consolidation, where you don't know if it's going up or you don't know if it's going down, right? So on days like this, stay out. There's no reason to ever trade those days, right? But when price is moving like this, very nice, then we know, okay, let's optimize on this and trade. Or when it's doing something like this, it's moving up very nicely, then those are the days that we want to trade on. And of course, you'll know right away. So if you open your laptop or computer and the direction of the market doesn't like slap you in your face, then like you don't know where the market is going. Like the direction of the market needs to slap you in your face. That will be like, okay, now I know where market is going. Now I can trade it. So anyways, well, that's the first thing, is obviously finding the direction of the market on a higher time frame. And then after that is simply as finding an entry point. So let's say I know price is heading to this level. Let's say we have a level down here and price is trending like this, and we just entered New York session, and I want price to go all the way down to here. Right, so I want price to go down to here. Okay, cool. So I know we're trending down. I know we want price to go down here. Now it's as simple as, okay, let me find an entry in here for me to take it and ride it all the way down, right? So you don't want to enter, for example, here, because you'll most likely get stopped out. You want to enter here, where the retracement happens, and then you can take an entry to take it all the way down there, right? Those are the best trades. Now, how do you find an entry point is the question. Well, first thing is I have a criteria, right? I have a list based on my strategy that if I see happen, then I enter, right? So first thing is, do we have a break of structure? Second is, did we leave a fair value gap behind? And lastly, are we inside the 50% fib level? If all three check out, then I enter a trade. So let me break down what it would look like. Okay, let's say we're trending downwards, right? For me, okay, let's say we're at this level. Did we break structure? Break structure is this. So you know how we're moving down? This is a break of structure right here. This is a break of structure right here. And now once we move back up, I want us to break structure again, right? So if we break structure again here, then that's exactly what I want to see. So we call those breaks of structure. Let me just mark it out. There we go. Cool. So first thing is, did we break structure? Okay, we did. Now, did we leave a fair value gap behind? Now, a fair value gap is simply the area between first candle and the third candle, which did not fill price. So which price did not fill? So I'll show you it on the charts to make more sense, but it's kind of like in this area. So if we go up here, there we go. A fair value gap would be something like this. This is a fair value gap. You see how this candle here, and then this candle here, and then you have this whole, this wick, and then this wick, and then you have this whole candle that has not been filled. So that is a fair value gap, is what we call it. And what you can see is price came and filled it here, right? So it came back up and filled it. Same thing here. You have this wick here, you have this wick here, and in between you have a full candle that has not been filled, that price has not tapped into. And what do you see happen? Price comes into it and fills it. Right, so that's what a fair value gap is on the charts. And here you can see you understand. It's just usually in here. Now the third step is we take our fib tool and then we draw it from the top of the range to the bottom of the range, and then we can see here the 50% level. So we want price to come up to the 50% level, which is right here. You can see 50% level. We want price to come into here, and then from this area we actually sell it, take it down to whichever level that we want, which would be down here. So if let's say we're targeting this level, we want price to go down to here. Okay, cool. We go up to the 50% level. From here, we want to sell it all the way down to here, and it would look something like this. Stop loss would be here. Take profit would be down here. Right, so that's how simple it is. Now, I just showed you it kind of like in theory. Now, let me show you what it would look like on the charts itself. Right, so let's go down to 15 minute, and let's go down, let's say to, let's see here, 15 minute, and then let me just delete this. And I'll delete this. I'm in backtest mode right now. So you can see here during my New York session. So you can see New York session, we're trending down, right? We're making higher highs, higher lows, higher highs, higher lows. So we're trending down. Now, what did we say we want? We want price to retrace back into here and then to continue all the way down. That's what we want, right? So now we use this. So we know we're going down. We know on the 15 minute, we want an area of interest or a fair value gap. So what do we see here? In this area, a fair value gap right there in between this candle and this candle. So you can see from this wick to this wick, this area has not been filled. So we call that fair value gap. Now what we want to do is we want to wait for price to come into this area first. Again, we don't want to sell down here because we wouldn't have the best risk to reward ratio. It'd be something like this, which is ugly. I don't want that. I want something like this from here. A stop loss just above here, and then take profit down here. That's what I want, right? We want to sell it in this area. So then simply what we do is we wait. We wait for price to come into this area. And as soon as it comes into this area, like I said earlier, right? If we're analyzing on the 15-minute, we want to enter on the 1 minute. So now that price is in this area, we simply drop down to the 1 minute. Now we're on the 1 minute time frame. Okay, cool. So what's the criteria to enter on the 1 minute? For us to actually confirm our trade and enter, 1, we need a break of structure. 2, we need a fair value gap that's left behind. And 3, we simply need it to retrace back to the 50% level of the fib tool for us to actually enter the trade and have a really good risk to reward ratio. Now let's see what that looks like. If we play it, okay, cool. What do we have here? Here, 9:30 opens, market open. We have a break of structure. So I'm simply just gonna repeat the exact same steps just on live charts. Break of structure here. Okay, cool. What did we leave behind? What's in between this wick and this wick? Fair value gap. So you take it from here, you draw out your fair value gap. Cool. Let's mark it out. Now we have a fair value gap. Now the last thing is we need to take out our fib tool and draw it from the high to the low, right? So you measure out the range, the trading range, and you can see the fair value gap is within the 50% level. So now all you do is you wait for price to enter into the fair value gap and the 50% level for you to enter. You wait for the next candle, boom, there you go. Price is in it now. You simply take your short position, paste it in here, stop loss above here, which is a protected high, by the way. This is what we call it. And then your stop loss, your stop loss would be up here. Your take profit would be at 1 to 2. That's it. So now you have your trade all set up. Now let's see how that plays out. And you can see it just simply melts. Right, so it goes right away into take profit and it even moves lower. So that's as simple as it gets, right? It's very simple. You just have to apply it correctly. And once you apply it correctly, it's very, very powerful. So that's exactly what I do. That's the same process that I've been using for a very long time, that I also backtest and journal so much to make sure that I am doing it correctly and I'm following the exact same setup every time, right? So this is my $1 million trading setup. Now, this strategy that I just shared with you has gotten me over 500K in prop firm funding and over $122,000 in prop firm payouts, right? So it works. And the reason it works is because I've backtested it over 1,000 times. I've been trading for 7 years, and for the last 5 years or so, I've just constantly been drilling down the same exact setup. So that way I know my win rate is 80%, right? Over 1,000 trades I've backtested in my trading journal, and I know I have an 80% win rate. So I'm okay if I lose 1 or 2 or even 3 trades in a row. I know it does not affect me because in the long run, I know my win rate because I've done the actual work, right? And this didn't happen overnight, but because I stuck to this system, right? I did not change it after a while or when something went wrong, I changed it. No, I stuck to this system and I was able to build it into my $1 million trading strategy. Now, I know this might sound like a lot if you're new. So what I would simply recommend is that you simply just copy my signals, right? So I've left a link down below where you can simply just copy the exact same trades that I take. Now I trade every single day and I send out my trades to my group that you can click the link below, check it out and just join the group and simply just copy the signals that I take, at least for the meantime, until you actually pick up on it and start understanding it. Now I post the trades with the analysis and the reason why I took that trade. That way you not only just follow, but you can also understand as you go and make money. Now, you can also check out my journey of how I went from 0 to trading full time. If you just click the link below, you'll see that video of how I went from 0 to trading full time and how pretty much this lifestyle comes together from trading.